This is me, and when I looked really pretty a couple weeks ago, so I was super excited about my headshot, so I had to share it. But just to kind of let you know a little bit about me and why you should listen to me, I'm a mom of 6. These are all of my kids and my husband, and I'm an author and a speaker, and I teach tax strategy. I teach tax strategy to network marketers. I teach it to home-based businesses, and that's what I love to do. I'm also a fractional CFO for 18 companies ranging from $500,000 in sales to $13 million in sales. So I do taxes. We own a full service accounting firm, and I do about 350 corporate returns a year, of which 125 of those roughly are network marketers. So I reside currently in Greenville, South Carolina, and I have clients in 35 different states. So from here to Hawaii. So I'll just get started. Like my aha moment and the reason why I got so excited about home-based business was I got involved in a network marketing company about 5 years ago. And I didn't get involved because I saw the big picture, because I thought it was a great idea. I got involved because someone asked me to do a tax return for them in the group. And so I did that tax return for them, and they were just a W-2 employee, and I was not used to having anyone just come to me to have me do their tax return that was just a W-2 employee. And then I was able to compare what she did last year or the prior year compared to this year with a home-based business, and it saved her $4,000 more than she'd ever gotten back before. And so it hit me really hard. Man, this whole home-based business is a great way for people to make some extra money. And what I've found is the average family is overpaying $4,000 to $8,000 a year by not having a home-based business. And then, you might ask me, well, why is that important? Well, the problem is I never could figure out why in the world, and I was actively involved in network marketing, and I grew a team to the top 1%. I don't do that anymore. And the reason why is because I want to share the tax strategy to the entire industry. But I never could figure out why people wouldn't join when you looked at them and said, hey, this is the most amazing concept on the planet. And they would look at me and say, you know what, you're crazy. Well, I realized that 46% of Americans don't have an extra $400 to their name, and 66% don't have an extra $1,000 to their name. And the reason why is because they're overpaying in taxes. See, the average household brings in $60,000 a year, and they're paying between $11,000 and $14,000 in taxes. So when they come home, what they bring home is actually less than what their cost of living is. And I'm going to break that out for you so you understand that in just a minute. But, a lot of people tell me all the time, well, Courtney, how in the world can I write off something if I didn't have an income? Well, the great part about owning a business is you're actually allowed to take tax deductions, even if you're not making an income, if you are attempting to make an income. So the IRS actually says, a tax deduction is any expense incurred for the purpose of gaining or producing income, and is incurred with a reasonable expectation of resulting in future business, and is reasonable under the circumstances. What does that mean? That means that if you're attempting to earn an income either today or in the future, then it's tax deductible. End of story. So it has to be reasonable. You can't go out and buy a yacht and say, hey, I wanted to write this off on my network marketing company to grow my business. But you could put some advertising on the yacht and be able to write off certain things on that as well. So, a typical accountants will teach you how to spend more money in order to save more money. What I do is teach people how to redirect the living expenses that they're already spending money every day on a daily basis, and teach them how to turn those into business expenses by doing daily business building activities. So I'm not telling you to get involved in a network marketing company or a home-based business and do nothing with it. What I'm saying is if you're attempting to earn income, and what that means in our industry or in this industry is for you to share the information with someone. And as long as you're sharing with them what you're doing, then you're attempting to earn an income. So here's how it breaks down. Here is a typical W-2 employee who's making $60,000 a year on average, and that is the average household income. So I put single and married up here. So this is their income. Obviously, they're a W-2 employee, so they don't have any business expenses. And we have the new standard deduction or itemized deduction this year. So if you go over 12 or 24,000, you can itemize. Most everybody knows that. But that gets us to our taxable income. And then you have taxes. So single is going to pay $14,000, married's going to pay about $11,000 in taxes. Here's our take home from that, from the 60 minus the taxes. And the cost of living in America is $53,000 a year. And so I lowered it a little for single, but it really doesn't change that much, that drastically. So what's happening is the average person is going in debt every year, $4,000 a year, to work 40 hours a week, 50 weeks a year, to take 2 weeks paid vacation. And so that hit me actually when I was on my way to Tampa to meet with Chris Kent and have a conversation with him about Experience. And I heard these statistics, and it really hit me hard that I was the person that knew that the average person can save $4,000 to $8,000 a year if they just have a home-based business. See, I've been doing really, really great with just my CFO services and my accounting practice. And, I really had been pushing the fact that I needed to go out and build my CFO services more because I was going to make more money off of that. And when I saw these statistics, I said, you know what, I have got to share this with the masses. So I started creating content to help people educate them on why they need to have a home-based business. So here's a W-2 employee with a home-based business. What I want you to understand that itemized deductions, you may be able to write off itemized deductions, but you have to exceed standard deductions in order for you to get any benefit from that. So a W-2 employee has living expenses and itemized deductions. The sad part is the living expenses, they don't get to write off currently. But the itemized deductions, there are limits and limitations that you have for itemized deductions. But if you exceed more than $24,000, if you're married, for itemized, then you get to write off more. But the problem is just say you had $27,000 in itemized deductions. Well, you only get to write off 24. So you're only really getting an additional $3,000. But by having a business, you actually get to write off a lot more of those expenses. So here's living expenses, and there's more, but these are just average: meals, auto expenses, cell phone, travel, internet. A typical W-2 employee doesn't get any benefit from those. Now, dependent daycare, they may get some sort of credit for that, but there's not a lot of these that you actually get benefit from. So here's what happens when you have a W-2 employee that has a home-based business. Now, the great part is medical bills actually can become a fringe benefit. So you can hire your spouse can pay 100% of the medical bills, and you in turn would reimburse him, and that becomes a fringe benefit and is 100% tax deductible on your business, which is really awesome. Then medical insurance is 100% tax deductible if you're self-employed. You've got property taxes. I'll talk about that one in a second. So business use of your home. The great thing about business use of your home is you can write off a percentage of your utility bills, your real estate taxes, your mortgage interest. You can write off a percentage of repairs and maintenance. And the greatest part was my swimming pool this year. I actually found a way through fringe benefits that I could write off 100% deduction on my swimming pool because I allow my employees to come to my house and swim in my swimming pool. Greatest thing on the face of the planet. I was so super excited about that. So business use of your home, I typically find between $3,000 and $5,000 in the deduction for that you get. So you can depreciate your home, you can depreciate your furniture and all that good stuff. Property taxes. So you can write off a percentage of your property taxes. If you use your vehicle 90% for business purposes, you'd write off 90% of your property taxes on that. Charitable contributions. This is something I'm super excited about. It's something I give. Every dollar that I give or that comes into my accounting practice, I feed a serving of whole food plant-based nutrition through a nonprofit. And that charitable contribution, because of the way that I give, is 100% tax deductible on my business, which is huge. So major, major deduction. Then we've got meals. So, I tell people all the time, if I have a conversation with my friend and I call them and I say, hey, look, I've got something I'm so super excited to share with you. And, you may not get it and that's okay, but I just want to share that information with you. And so when I get in my car and I drive, 20 miles to go see my friend at a restaurant, I get to write that off at 58 cents per mile. And then when I sit down and have a meal with my friend, and let's just say it was $20, I get to write off 50% of that meal. So I get to write off another $10 of that of the meal. And then if my friend decides to join or not, whether they do, it's okay, but I'm gonna get right back in my car and I'm gonna drive back home, and that's another 58 cents per mile. So say that was 20 miles. So you get to write that off. And then I get to write off my cell phone because I had a conversation with my friend about my business. And then I get to write off business use in my home. So at the end of the day, I want you to understand who's the smart one. If you, if your friend decides not to join you, there's nothing you can do about that. But at the end of the day, they're paying more taxes than you are because they're not as open-minded. So I literally tell people, you're just not educated on the industry. You don't understand how big of a deal having a home-based business is. And so that whole fear of rejection kind of goes away because the tax benefits are a guarantee. And if you share this with enough people, you will make money. I mean, hands down. You could really suck at sharing this with people, but at the end of the day, if you share it enough, it's going to happen. So you can write off a percentage of your cell phone. Me, I'm always talking about business. I don't care what it is to who it is. So I'm writing off 100% of my cell phone. So depending on what percentage you use, you can write off a percentage of your internet as well. Travel, this is one of the greatest things, especially for your industry. So your vacations, literally, because you guys are in the travel industry, you have to share your product or you have to use the product in order to share the product. So the great part about what you guys are doing is you get to write off your vacations because you are literally sharing that with people and you're sharing that experience, and then you're promoting that through social media advertising. So, you can virtually take anything that you're currently doing and turn that to a travel expense, which could be much more than this, and I also always try to center a vacation around a continuing education event. So, and take my family with me, and then that becomes tax deductible as well, or at least a portion of it. Now, probably the most exciting deduction that I have is hiring your kids, and I'll share this in more detail in just a second. But these are just some averages that I've seen that people are spending each year, and you may have more and you may have less. So office supplies. We're going to spend money on new iPhones or new iPads or a new projector or new clicker, new paper, printers, all those things. And those are tax deductible if you just have a home-based business. So some of the things that we may not be spending money on currently are advertising. And, you may or may not spend $1 on advertising. Social media has done a really great job of allowing people to market their product and not spend any money on advertising. Then you've got continuing education. And guys, I will tell you hands down that personal development and continuing education will completely and utterly change your life. I got involved in this industry 5 years ago, and the only reason I got involved is because I saved somebody some money on their taxes, and I showed up to an event only because I was going to find other people that I could save them money on their taxes. That was it. This industry has grown my accounting practice indirectly 36 and a half times in the last 5 years. And in the last 16 months, I've really ramped it up and started putting more money into my personal development and continuing education and motivation. And it's grown my practice 8 times. So life will never be the same if you actually show up to these events and get around the people who have more than what you have currently today, and you get the belief that you need in order to grow this business. So the next thing is dues. So if you have monthly dues that you're paying, that is tax deductible. I like to tell people, used to when I was in network marketing, it was like you could spend $100 here for yourself, or you could spend $500 in taxes. Which one do you want to do? You can either give it to yourself or you can give it to the IRS. Whichever one's good with you is fine with me. And then cost of goods sold. So if you buy product or if you're giving out samples of product, that's also tax deductible as well. So This totals up to $34,000. And those are typical. That's average. And there's other deductions. And when we get finished with this, I'll be happy to send you guys a deduction spreadsheet that you can actually get. There's 78 different deductions that I've put in an Excel spreadsheet that I'll be glad to send you guys. And so going back to the W-2 employee versus the W-2 with a home-based business, here's how it looks. And I just listed $25,000 worth of business expenses to make it reasonable and logical for you to see it. And so we would have the income. We'd now deduct the business expenses. Then we would deduct the standard deduction or itemized deduction. Now we have our taxable income. We have the taxes. We have our take home and the cost of living, and you're actually getting out of the hole. And so the difference in that is almost $6,000 a year or $473 a month. And I broke it down so people can understand this will be equivalent of you making an increase in pay of $3.79 per hour or $3 an hour if you're married, which is huge. I mean, there's nobody's getting a raise like that this year typically. So, and here's the thing, you have got to attempt to earn income. So you have got to attempt at least, the IRS code says you have to give it 3 to 5 days a week for 45 minutes a day. If you put that much effort in your business, and typically you should put more in the beginning, but if you're starting to do that, then you're in business for business and not for a hobby. So, and the bigger thing is the more money that you make, you'll start making money over in the business aspect, and the bigger the difference happens. See, you're not paying FICA taxes for the first, year, 2 years, depending on how much money you're making, because you actually have business expenses to offset that. So hiring your kids is probably one of the greatest things ever. Kids are extremely expensive. They have sports, dance, college, weddings, all those good things. Well, you can hire them and they can pay for their stuff. So I have 6 children and they each get paid $12,000 a year. And by doing so, that's $72,000 in a deduction, which saves me about $25,000 a year in taxes. Now, if they're under the age of 18, they don't have to have any FICA taxes taken out because they're not required to do that. They have no unemployment taxes that you have to pay because they're your children and they're not entitled to unemployment. And they also, for the first $12,000, don't have to pay any federal or state taxes. So none of that has to be withheld. You can pay them as much money as you want, but understand because the new standard deduction, they don't have to pay taxes on the first $12,000. So this is called income shifting. And you have to pay them a reasonable wage, but you can pay them to do things like shred paper, file paperwork. You can pay them to, I have children that I pay to get on social media for me and like things for me. I have models, my 6-year-old, she's a model for me. So I pay her a modeling fee. So, I have a daughter who does data entry for me and I pay her for that. So they can clean the house if you operate from your home. And probably the biggest expense I want to tell you guys is if you have events in your home, not only can you pay your kids to clean up and all that stuff, but you also can write off 100% of the meal that you provide at your home if you're doing a presentation. So that's a big win-win. Or if you did it at a event facility, you could write that off as well. But that's a big deal. Bring over some people every couple nights and have an event at your house and you can write off all your food. So just saying. So when you start making money, and I suggest this with everyone, especially to have an LLC, but when you start making money, I want you to be able to keep more of your money. So if you have an LLC, that has nothing to do with taxes, but it limits your liability. But what having an LLC will allow you to do is treat your business as one of 2 things. You can either treat it as a sole proprietorship, or you have the option to treat it as a S corporation for tax purposes. And the reason why you'd want to be an S corporation, especially if you're making more than about $10,000 net income, is that it allows you to bypass almost all of your self-employment taxes. And here's an example. So if I had $60,000 in net income for my business, I would pay not only federal and state taxes. If you're in Florida, you're not going to pay federal taxes in certain other states, but you'd have to pay federal taxes, and plus you would have to pay self-employment taxes of your net income of 15.3%. And so this would literally save you about $9,000. So what I typically tell people in an S Corp election is that you want to claim about 80% as a distribution, 20% or 25%, depending on how you feel about it, as your paycheck. So you would only pay self-employment taxes on that. So this requires a little bit further advice. But the next step, and the great part about what you guys are doing, is that you're entitled to what's called a 20% pass-through entity deduction. And this year just started that, 2018, allows you to take an extra 20% deduction off of your net income. So instead of paying taxes on the $60,000, you would actually get an extra $12,000 off of that by being in business. So you have to have a paycheck in order to do that. So that requires a little bit more conversation with me, and I'll be glad to walk you through it. So, in summary, I just want you to know there has never been a better time in history than to have a business. Every single thing that W-2 employees were getting as a deduction and as a expense that they could write off are being taken away, and the new tax laws are favoring business owners. And people ask me all the time, Courtney, why are business owners treated differently, or there's loopholes? And that's not the case. What happens is 76% of employees are created by small to medium-sized businesses. And in order for us to be able to provide for more employees in the economy, the government has given us massive tax deductions. So we get the tax deductions, we hire employees, and the employees pay the taxes. That's just the way this country works. You can like it or not. So business owners' deductions are getting better. W-2 employees are losing more deductions. So, and if someone tells you, I can't write that off, that's, my accountant told me that I couldn't write off this much in auto expenses. That's not so. There's no maximum that you can write off. It's what your total deductions are. So don't let someone scare you into not taking the deductions that you're entitled to, especially business use of your home. It's one of the greatest tax deductions that you're entitled to. And as long as you're attempting to earn an income, then you have nothing to worry about. So, just take what you are allowed to take. And, if you have questions, I'll be happy to help. Hire your spouse and your kids for massive extra tax deductions. And don't do your own taxes. I don't care who does your taxes, but TurboTax, I just had a client this past year said, Courtney, how can you be better in TurboTax? I can enter all my stuff in. And I said, well, I don't know. All I can do is show you. And he literally got back a $900 refund, and he was going to have to pay $20,000 to TurboTax through his TurboTax return. It also, the IRS knows that you're doing your own tax return, and you're more likely to make errors. So you're more likely to be audited. So just don't do your own tax return. You don't want to get audited and have no one able to represent you because they didn't prepare the tax return. And the 20% pass-through entity deduction, I've already explained that. So here is my book, and this book is available for wholesale and retail. If you're interested in buying it wholesale, I ask that you buy at least 10 copies. They're $9 a piece. If you buy them individually, you can buy them at my morerelaxinglesstaxing.com website. They're $12.99. Every book will feed a child for 28 days. It's guaranteed to save you $5,000 to $10,000 a year. And, as far as there's a couple things I'd love to share with you guys. One is this OTB Tax YouTube channel. I've created lots of content to help people understand not only tax deductions, but also understand, I actually have a video for the travel industry, why you would want to be involved in the network marketing industry, and then why you would want to be involved in the travel industry. So it's there on that YouTube channel. And then also I've created this group, which will give you weekly tax tips in this More Relaxing, Less Taxing monthly group. And so just go there and request to join. And I appreciate your time. Buy the book. If you have questions, I'll be glad to answer them.